Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up. And this wrap-up is for Monday, the 22nd of November, 2021, about 6:20 p.m. Central Time. Well, what a washout in gold today. I did my special metal report. You can visit it on our website at www.iraepstein.com. I'll talk more about this at the end of this, and under the word research, it is there. I gave two scenarios. We had an embedded reading, I'll cover that in a moment with you here, that if it was lost, probably called for the market to go down towards the 1790 level. That's what happened, and that's where I think the buyers are awaiting their opportunity to come in and grab this market. I'll show you that in a moment here. We have a new nominees for the vice chair of the Fed, and that's Ms. Brainerd. So she didn't get the head role. She got the number 2 role, so everybody got something except Ms. Warren, Elizabeth Warren, our senator, who hates Mr. Powell, thinks he's a danger to us, and he got the nod again. The market at first went up in stock indices and then let go. Now, I don't know if that's because of that or the fact that today was probably the last full trading day before people start hitting the road for the holiday travel. They're saying that tomorrow it should be very, very busy at airports and everywhere as people make their move into it. I know I have a full family coming in tomorrow night. They'll be here for several days, so I imagine this is going on throughout the country. And I think today was one of those liquidation days where the pros said, hey, I got family coming in, what am I going to do? Now, luckily, mine come in the afternoon, but that means Wednesday I'll have a rougher time than I normally would in trying to do my reports and trying to balance family. And as you know, then we're off for Thanksgiving, and we have abbreviated trading sessions on Friday in a number of markets. So you want to keep that in the back of your mind. So let's talk about the gold. The market is still over the 18-week moving average of closes. That is the number or zone that I am looking for this market to find its legs under. I'm obviously wrong if you get much under this whole area, but we'll see if that occurs. When you come to the daily chart, we had said just prior to all this, and I knew this coming in, that if this didn't hold and pop out the top side, you could get a reaction. I did not expect initially a bigger reaction as this today, a $45 break. No way that I was expecting that one way or the other. The market now, tonight, has to figure out what it wants to do because we've got lower highs, lower lows. You're up a few dollars tonight, but it doesn't mean much. Where the next support level comes in is a big one. I showed this in the metal report. It is really the combination of the 200-day average, the 100, and you even have the 45-day average of closes, I believe, in that general zone. So that's where the bigger support comes in. And of course, if that gave ground, then this lower Bollinger Band at 1763.80. Why am I friendly the market on an overall pattern on the weekly chart? Not here. Well, here, you're under the 18 weeks. So I would expect that if we reach down there, we should see some support, especially given the fact that momentum is already out of being overbought. When you lose the embedded reading, you typically go from embedded super bullish, and when you lose these numbers just the way you did, you get immediately overbought, which you did on the close. You have a 77 reading here, as you could see, and suddenly both numbers are under 70. So you're instantly out of the overbought. Now the market's in the pattern of looking for its footing. That's how I'm going to look at how this market wants to react. In the gold-silver ratio, unable to still pop through the 18-day average of closes, which is friendlier for silver than gold. Silver's still very much in an uptrend. It got hit like the gold market today, came down, was down 48 cents, found its bearing between the 18 and the 100-day average of closes. It, if we take a look right here, did it embed? Both numbers over 80, both over 80. That was Wednesday, Thursday. Friday, you lost it. So before today's break, this had said you can't be long anymore, and today's break, that just went back to where you normally go when you lose an embedded reading, which is the 18-day average of closes. I teach that in my charting course. In the copper market, The first challenge of the lower Bollinger Band, when it was down there, you know what I said to you. I said, that's where I think the pros are covering their shorts. Go take a look at the videos on YouTube. I'm pretty sure I would have said that. Now, I'm not bullish or bearish. I think it got too cheap. Now I think it'll be too expensive if it gets up to the upper Bollinger Band. Peru created some interesting parts of the market today by shutting down early 2 mines in Edict. Now, I don't know the exact date, but one of the companies, one of the mining companies there, certainly saw its stock get slammed by it. Remember, when you're in a foreign country, they can do whatever they want. In the platinum, you've literally gone from the upper Bollinger Band and very close to the lower band, and you're already oversold. This market has stepped out of its uptrend. It did this way back over here, right on this day here, when you got under that low. And as it was coming up, we were talking here that when you hit those Bollinger Bands and you're not embedded, the professional money comes out of the market often. That's what I teach. It's what I believe. Doesn't mean I'm always right. Nothing's always right. But I haven't changed my attitude on what I teach. And in the Palladium market, you had run the upper band from back here, never did embed, and now you get this correction back. Did I expect it to slice this much down? No. I thought it was going to hold the 18-day average better than it did, but it didn't. Okay. So you're going into Thanksgiving, money, no trend. People cashing out, and that's pretty much the story that I'm seeing, with the exception of the dollar, which has an embedded reading, and it is riding the upper Bollinger Band, the higher levels. How much higher? Can't tell you. I can tell you that until this red line closes under 80 on the pullbacks in the market, I expect to see the pros continue to buy this market. Now, I told you that I did my special gold report, and I did it different today. Normally, I'll cover for you in them price counts and some seasonals. I didn't do that this time. I added gold ETF, gold miners, and then I went on to the regular futures charts, and this is all about gold from the weekly basis right into the daily. And the reason was I knew that if the daily gave up its embedded reading, that the next play comes off a strong move that should find support into these lower averages on the weekly chart. That's what I'm still expecting to see. Do I think we've solved inflation? No. Do I buy the arguments that the Fed is going to suddenly raise all the interest rates and get very aggressive in June? Not yet. I know that the bright minds think that. But we have to see how transitory inflation is. You know, in China, they're making arguments already that this inflation that they had, coal prices down about 25%, shipping containers, suddenly freight rates, they're all coming down. Is it transitory? That's what we've got to pay attention to. So how do you see this report? Just go to our website. On the website, under the word market research, it's right there. Click on it, and away you go. I'm Ira Epstein. You have a great evening. I will talk to you all tomorrow.